What's up, you guys? Igor is here. So despite the illness, despite the shutdowns, despite the protests and business disruptions in many big American cities, the stock market just keeps going higher. It's like the stock market is detached from the reality and is doing its own separate thing, and nobody seems to know why. As a matter of fact, it actually angers a lot of money managers who missed out on this 45% move off the lows. With so many people predicting another bubble, another crash, or a total Armageddon of the stock market, it's inevitable that it will keep going higher. Yes, I know it sounds counterintuitive, and I will explain what it means a little bit later. In this video, I want to discuss three things. First, why the stock market is keep going higher and may continue to go higher. Second, with the Fed printing so much money, how come we don't have the inflation? And third, what should we do? Well, for starters, please lightly tap that like button below this video. No need to smash it, just lightly tap it. And if you didn't subscribe, please do so, and you can also join my trading club on Patreon. The link is in the description. So why is the stock market keeps going higher, despite all the illness and disruption we've had? Well, first of all, people are very excited about the reopening of the economy. As you probably know, before the illness, the economy was booming, growing 2 to 4% a year. Stock market was at all-time high and unemployment was very low. So many investors are expecting a V-shaped recovery. They expect businesses and consequently earnings to go back to normal. Second, as cruel as it sounds, who do you think the illness and recent looting and property destructions hurt the most? You got it, small businesses, mom and pop shops, shops with 10 or less employees. It hurt large companies as well, but for the most part they came out unharmed. As a matter of fact, many of them even thrived, especially big internet and tech companies such as Amazon, Microsoft, Google, Apple, Facebook, and also big retailers like Walmart or Costco. And there are many others. These are very powerful companies that consumers love, and these companies actually benefited from this shutdown, and many investors piled into those names. Third reason why the market keeps going higher is the high possibility of the vaccine or treatment being available soon. With so many great pharmaceutical or bio companies working on the vaccine, it's inevitable that sooner or later we'll have one. Some of these companies are actually forecast to have first doses by the end of 2020. Besides, many people were so tired of being locked up at home that as soon as state and counties restrictions were lifted, buyers were flooding shops, malls, and restaurants. With the latest retail figures for May of 2020 showing retail sales rose 17.7%. As you can see from this chart, we've had a jump in May in almost all major retail categories. For example, clothing store sales rebounded 188% for the month. All these great numbers make investors believe that maybe the worst is over and the economy is on path to full recovery. Yes, the government officials keep talking about the rise in cases in some states as we reopen the economy, but for the most part it's been well contained, and the latest figures showing that overall new cases have been either tapering off or going down. There is of course a possibility of the second wave in a fall, but people think that we'll deal with it when we get there. Besides, we may get a vaccine by then. All of that gives optimism to investors that maybe the worst is over. Fourth reason why the stock market keeps going higher are the millennials and the Robinhood crowd. With no sports or casinos to do gambling, a lot of new and frankly very inexperienced investors are jumping into the market head first. And they're all led by a self-proclaimed king of trading, Dave Portnoy, and his 1.5 million Twitter army of followers and traders alike. For those of you who don't know, Dave Portnoy is the founder and chief of the sports blog website Barstool Sports. Barstool Sports also takes part in sports betting, but with most sports shut down right now, Portnoy has taken on day trading. By the way, I have to give it to David. He is entertaining and not shy by any means. In his latest video on Twitter, he said, "I'm being modest when I say I'm the world's greatest day trader. My unlimited money has upgraded to infinity money." A few days later, he said, "There is nobody who is going to argue that Warren Buffett is better at the stock market than I am right now. I am better than he is, that's a fact." Sounds pretty funny and ironic to me that people take Portnoy's comments on Buffett seriously. After all, he just wants to entertain. But the point is that these traders often get into stocks with very questionable fundamentals. Some of these companies are simply bankrupt or about to go bankrupt, and these traders drive values of these companies higher by buying shares and hoping for another trader to buy those shares even higher than them, regardless of the quality of the company they are buying. Sort of the stock market gambling. For example, Hertz, Luckin Coffee, Oasis Petroleum and Gas, or Chesapeake Energy, just to name a few. Because of the high number of these new traders, they do have some effect on the markets. The fifth and probably the most important reason why the stock market keeps creeping higher is the Fed and government stimulus. Let me tell you guys, the 4 reasons are provided above are good reasons, but we wouldn't be even close to where we are right now if not for the Fed. Fed single-handedly pulled us out of the mess we were back in March and April. At the time, it looked like the US economy was in a freefall with no hope of avoiding a downturn that would rival the Great Depression. The Fed, though, had other ideas, starting with taking the interest rates down to zero. Interest rates at zero means that companies and individuals can borrow money at a very low rate from the bank, which in turn stimulates economic activity. Then Fed unleashed a number of programs aimed at big and small businesses as well as households and governments, representing $2.3 trillion in economic stimulus. The programs were far and away bigger than anything the central bank attempted during the financial crisis, and it acted much quicker than back in 2008-2009. While Congress was still arguing over a $3 trillion stimulus package, Fed was buying mortgage-backed securities, government-backed bonds, treasuries, and corporate ETFs, and that saved a ton of companies from going under, which would have had a ripple effect throughout the economy and financial markets. Fed continues its support for the markets today as well. They just announced that it will buy individual corporate bonds, essentially providing an unlimited ability for companies to issue new debt at virtually zero rates. But in my opinion, that creates somewhat of a problem because the Fed is saying now there is no need to go bankrupt, just issue new bonds with a low interest rate. That might create a number of zombie companies that can only pay interest rates on their bonds but never have the ability to pay off the bonds itself. Also, now companies can issue bonds to buy back shares to please the investors, and that could drive stock prices higher but eventually raise corporate debt to unsustainable levels, which could be a problem in the future. But in general, Fed providing unlimited support to the market right now will drive the stock prices higher. And the last reason why the stock market keeps going higher, and in my opinion will continue to go higher, is because I already mentioned this in this video in the beginning. There are way too many bears right now. Bears are those investors that think that the market will fall, and bulls are the investors that think that the market will rise. Common investor knowledge is when there are too many bears and the market goes higher, many of those bears will be converted to bulls. If you think about it for a moment, it actually makes sense, because if everyone was bullish, then there is no one left to convert. But with so many bears around, plenty of them will have to join the bulls if they don't want to miss out on another great bull run. Nowadays, when I watch CNBC, Bloomberg, and even YouTube, people are so amazingly negative, and that makes this rally even stronger. But here's another question, and I'm asked this question all the time. With the Fed printing so much money lately, how come we don't have the inflation? How about the following statistics? The personal savings in the United States amounted to approximately $1.3 trillion in 2019. That means that in 2019, $1.3 trillion were taken out of circulation by people saving it and not spending it. In April of 2020, personal savings was approximately $6.15 trillion. Do you see the difference in those numbers? That means that $6.15 trillion instead of $1.3 trillion was taken out of circulation in April of 2020 compared to 2019. That gap needed to be filled somehow, and that's a huge gap. So yes, the Fed is printing, and yes, the government is printing, but all they're doing is trying to cover that gap of money being taken out of circulation by people not spending it. With so many people unemployed, economic activity goes down. Back in March of 2020, Fed quickly realized the problem and started immediately pumping money into the markets. And that's what saved the markets then, and especially banks. At the same time, it didn't create inflationary pressures. So the government can issue checks and give money away, but if people don't spend it, the economic activity will remain low and therefore the inflation will remain low. But now with V-shaped recovery on our hands, people start to spend more money, and that should increase further the overall liquidity in the markets, therefore pushing the stock prices even higher than they are right now. What else is pushing the inflation lower even with Fed and government printing so much money? One word: technology. Innovation of smart electronic gadgets like smartphones has reduced the demand for various other gadgets. My little iPhone today has a better camera than professional equipment a decade ago. According to the US Bureau of Labor Statistics, prices of general tuition and medical care have risen, while prices of television and photographic equipment have decreased since 2010. I'm sure there are other factors that influence inflation and why, after all this printing by the Fed and government, the inflation remains so low, but the two reasons I provided are the most obvious to me. And that gets us to the third and final question of what should we do now? There's an old saying, don't fight the Fed. What it means is that when Fed is providing liquidity to the markets, it should be an overall positive for the stock market, and you should be invested. With the vaccines on its way maybe as soon as this fall, and the Fed constantly pumping an enormous amount of money into the economy and pledging keeping the interest rates near zero for a very long time, it's inevitable to me that the market will continue to go higher. And that's all despite all the critics and crying money managers that missed the move off the lows. Will there be sell-offs along the way? Absolutely. But overall, the market will remain in a bull mode. As a matter of fact, if the inflation eventually does pick up, that's even a bigger reason to be in the market because as inflation grows, savers get killed. But will it be another bubble? I believe there will be. But for now, if you consistently invest a certain percentage of your income in the stock market, you should be in a pretty good financial shape going forward. I hope you liked this video, guys, and if you did, click the like button, subscribe, and write me some comments. I'm always eager to hear from you. Adios!